I had one client, she was just really struggling with market structure, especially the advanced market structure. And then it hit me that she probably doesn't understand higher highs and lower lows and the understanding of external range liquidity and internal range liquidity and the connection between the two of them. So that's what this video is going to be about. This video is going to be the intro into module 1. I originally was going to do a full course, but I just don't have time for that. I'm going to make my videos and they're just going to be based on the course that I've outlined. What is the module 1 going to be? It's going to be intermediate term trading strategies. So each different subject will be broken into a different video. A bullish trend is going to consist of higher highs and higher lows. When you have a move up and then a retracement takes place like this, and then another leg pushes up and it goes past that one, that would make this was originally a higher high, and this was a higher low because it's higher than the previous low. Let's imagine that this was a low that was put in like this. So it's higher than the previous low, so it becomes a higher low. And then this is a higher high because it's higher than the previous high. So here you have a higher high and a higher low. Why is that a higher high? Because it's higher than the previous high. And why is this low a higher low? Because it's higher than the previous low. And then a bearish trend will consist of lower highs and lower lows. And it will look like this. So you have this lower low right here. So you'll get put in like this. So now we have our first lower high put in. That will be like that. And then once this low gets broken, you're going to have your first lower low. What's also taking place here is buyer's market maker model. And this is the sell market maker model. You have the left side of the curve, and then this is the right side of the curve. External and internal range liquidity. Let's make a diagram because I believe that's the best way to first get a grasp of the concept. Let's say you have a large swing in the market. Now, this is your original higher high and lower high. But inside of here, let's say as price action starts moving around, another lower low, but then you get a break of that lower high. So now you have a higher high and a higher low. So now the external range liquidity is going to be the original higher high and the original higher low. But inside of there, all these different higher highs, lower highs are going to be the internal range liquidity. So when you're thinking about price, you can expect that this lower low is more likely to get broken because it is internal range liquidity. It is not the external range liquidity. I've always believed teaching was the best way to learn something. Just because I'm teaching does not mean I'm not profitable. I post my payouts on Twitter all the time. You know what? I'll prove it to you guys right now. I have no problem with this. Let me log into my PayPal. So here is my latest payout from Blue Knox. Almost 7 grand. So just because I am teaching doesn't mean I'm not profitable. It just means I like to teach. And I think it helps me understand price better. If you want to get funded, now is the time. There are 2 companies that are having really big flash sales right now. Come to my website. I'll put the link in the description. It's verifiedfundingcompanies.com. You can subscribe, get the discounts sent to you. These are the discounts you need to jump on now because you can get an evaluation for under $20, which is a 50K evaluation with Blue Knox. Use the code King90 Apex. Use the code Proven50. These 2 companies right here are amazing prop firms. The best way to learn this is to go into the charts and identify the higher highs and lower lows. Let's look at this big swing. This is going to be external. You have a lower low, and this is going to be a higher high. Now this lower low and this higher high are external range liquidity. And then you have a lower low. And then you get another big drop down, and notice how it does not go below that external lower low. So now you have a higher low. It's actually probably more like an equal low, but we'll just call it higher low for this example. And then you have a lower high, and then you have a lower low. So now you can start seeing that the trend is switching from lower lows to now you're getting higher lows. Then you have a higher high and a lower low. Actually, you could have said that was a lower high, and then this is a higher low, higher high, higher low, higher high, but still not breaking the external range liquidity. So you can look at the original higher high and lower low as the external range liquidity. And then all these highs and lows inside of this really large leg that is right here, this large leg, everything inside of there is internal range liquidity and should be expected to be broken and ran. But the external range liquidity is going to be harder for price to break through and less likely for it to. Doesn't mean it won't, doesn't mean it is impossible for it to happen, but it could still happen, right? It's just less likely to happen. Price is going to have a harder time breaking through there. And then this is where you get the traps that are likely to take place. Like this one, they set up this is definitely a trap down here. You get the traps that are set up on the external range liquidity zones. I'm going to break down how you can use this to help you in your trading tomorrow. So you have a higher high and a higher low that is bullish. And then you have, when you start seeing lower highs and lower lows, it is bearish. And we have external and internal range liquidity. It can be tricky identifying internal and external range liquidity. I would just zoom out and then find the lower low. And then once you have a higher or lower high inside of that lower low, that should be your external range liquidity. Let's use this example right here. So you have external and then external up here. This is your external range. Anything inside of here is going to be internal range liquidity. Let's say you're following this trend right here, and this is New York opening. You're starting to see a higher high, and then you see a higher low, but then you have your first lower high. Then you have a lower low. You can be pretty certain that the trend has changed short term. This is actually a legit market structure break right here. Why? Because you had a higher low get broken. That's why ICT's concepts seem to be very difficult, but in reality, they're not. It is just following basic market structure. So you have a higher high, higher low. Once that higher low gets broken, then you have a lower low. The trend is now bearish short term. So you could take that retracement after the break of the higher low. So you could take that fair value gap entry. And then let's look at over here. So you have displacement down, and then you have a higher low put in, or a lower high. Boom. And then you have a lower low. So the trend is still bearish, right? And then you have a higher high, and then you have a lower or a higher low. I've been doing this video for a couple hours, so now I'm getting like tired. The trend is changing, right? It hasn't broke this yet because that's external range of liquidity. You shouldn't be expecting that to be broken. But you did have a lower low, and now you have a higher low and then a second higher low. With a higher high, you could probably take this retracement into this higher low right here and go long, targeting that higher high, and you'd probably do all right. It's just a good way to follow the trend, and it will help you understand the later modules we're going to go over. The next video is going to be the start of module 1. It's going to be intermediate term trading strategies, and we'll be going into the intermediate term highs and lows, the more advanced market structure. I suggest you watch this playlist that is in the top right hand corner. I think I'm going to delete all the videos on my YouTube channel and start from scratch, because the YouTube channel started off to help people and it's gotten off track, and each video is its own topic and they're not in any kind of order to help people learn. Somewhere along the way, I pissed off the YouTube algorithm. So I think I'm just going to delete all the videos and start from scratch. Both of them are really great. Apex does allow trading view, which is pretty cool. But even with that, you can use this, which is the Rhythmic app, which you can download on your phone, or you can use it on desktop like I do. But you just sign into it and then you can put it off to the side while you have trading view up, and then it's really no different than trading with trading view. It's probably actually a little bit smoother because you don't have near as many problems with trade evade, which happens time to time. I don't experience them, but other people talk about them. You can also check out my Facebook. It is Inner Circle Trading ICT. We just actually launched a Discord this week too. I want to thank the guys in my group that are helping me do that. They're actually the ones doing it. I had set up the Discord a couple months ago, but never really got it going and figured out how to get it going. But the guys that are moderators in my group have taken it upon themselves to do that, and they rock for that. I appreciate them. So I'll put a link in the description for this as well. I am most active on Twitter though. This is where you're going to find me posting the most and sharing my thoughts about price and whatnot. So I'll put the link in the description for that as well. Really jump on these discounts though, because the mental side of it is helped a lot by the cost of the prop firms, because they're so cheap. You can buy 3 or 4 of them with each company, not really have to stress about what it's going to cost if you fail. I'm not saying to YOLO the accounts, but I am saying it will allow you not to be stressed. And if you fail, it's not a big deal, taking off the pressure. If you're spending $300-$400 for one, that puts a lot of stress and it's going to make you trade differently and you're probably going to fail. Thanks for watching. If you want to learn more about my strategies, in the right hand corner, you can check out those videos right there.